My name is Matthew Buckley. My call sign is Wiz, and seeing a little bit of a unexpected pop out of the market with, to be honest with you, a little conflicting data here. The challenger job cuts. This is a bad number, 71.5. Let's just round up. ADP, that obviously we'll get non-farm payroll tomorrow, but since it's a holiday shortened week, we got ADP today. It was a blowout number. 181 was forecast. We got 253. Now let's kind of break this down here. ADP employment surges despite the biggest job cut spike in 2 years. There's the challenger job cuts, folks. Look at this. This is bad. That they should change the colors on here. The up should be bad. So that's a little off. So obviously the market really doesn't. It kind of cares about this. This is why we're seeing a little bit of rally. We'll talk about oil in a second. But the job cuts isn't necessarily good, folks. So a little bit mixed there. But here's why we're catching a bid in the market today. Oil got the axis of love. This is the first, folks. A big Saudi and Russia détente heralds a new world oil order. I told you that I told you the other day, or in a member's live trade brief, I said, first of all, folks, Russia isn't a part of OPEC. They're the biggest 500-pound gorilla in the room. They can do whatever the hell they want. The fact that they're jumping in bed with Saudi Arabia, the 250-pound gorilla in the room, is a big deal. So oil's going to catch a bid today, and it's definitely going to be interesting here. So stocks, a little bit of a bump. I mean, you just can't keep this market down, folks. You gotta. I'm going to stop trying to put a top on this market because it's a fool's errand, man. You got to smoke the hopium and just keep going. I have a SPX bear call spread that's in a little bit of trouble right now. The 2415, 2420. This was unexpected. This is out of the blue, and it's just not. I'm done. We're done trying to put a top on this market. I remain market neutral just because we're very hypoxic up here. Jim Comey is going to make an appearance next week. That should be some interesting fireworks. Big articles in the journal today. The VIX snooze fest kept rolling in May. Look at this. The fear gauge. The VIX closed below 10 4 times in the month. That is the first time in the history. Yeah, I said the history of the VIX that has ever happened. Okay, that was lower than any other month besides November 2006 when it averaged 10.82. We had a 10.86 average last month. That's ridiculous, folks. The historical mean for the VIX is a 20. We're down here plumbing the 10s. What's that mean? Everything's great and everything's awesome? No. But look at this. The quietest month since 2006 brings back the vol trade. So I'm going to talk about this in our options weapons school training when we get airborne in a couple weeks. I'm actually jumping on a plane here in a little bit, heading up to Chicago, options capital of the world. More than 300 million went into ETF products that short vol in May. That's a dangerous trade, man, to be short vol. Potential nuclear war with North Korea. We got Russia, just like Marsha. A lot of potential bad things that can go wrong in this market, and we just kind of whistled past the graveyard. And I briefed you on this, what was it, last week? Another good article in the journal, obviously the paper of record. It said, hey, the market is freaked out. It just doesn't know what to be freaked out about. Everybody I talk to, a lot of folks swinging out a lot of serious capital here. They're terrified. There are so many macroeconomic events. The macro data are weak. Construction spending plunged in April. Okay, look at this, man. Look at my SITREPs from this week, folks. There's a lot of these charts where there's red down, and I just showed you the challenger job cuts up, which is bad. So, folks, it's yeah, like I said, you got to smoke the hopium here, man. You have to trade the market you have, not the one you want. Not that I want a down market, but there's a lot of, let's take a look at the chart here. The last time we had an implosion was a Comey memo, right? Now the dude's going to be testifying in public. You want to be bullish on what this guy could say? I'm seeing a lot of Republicans saying, I'd be shocked if this guy says Trump influenced him, because a month ago he said under oath nobody had influenced him. So he's going to do one of those Clinton press conference dances, man. It could shake the market. Or we just kind of again, whistle past the graveyard and just grind higher. The plunge protection team is in full effect, and you gotta bid this thing higher, man. It's nuts. A lot of smart people are not deploying new capital at these highs here, man. But again, I always have to red team everything I say. Here's what I mean. We don't know if we're hypoxic up here until we get over here, right? You can always, I love chartists. They can look at the left side of the chart and tell you everything that happened. Duh. But I'm telling you right here, man, not a lot of people are the sell in May. Well, actually, it's June 1st, anniversary day. And guess what, man? Sell in May, go away didn't happen. It was buy in May. And everybody's off to the Hamptons and bidding this market higher. So, all right, folks, I got to run. I'll be back with Friday's market wrap-up tomorrow from the options capital of the world in Chicago. We'll see you. Have a great